Good morning, everyone, and welcome to our NICAR Commercial Real Estate Broker Forum. Before we begin, many of the persons listening and are watching this webinar may be direct competitors in the real estate brokerage business. Therefore, to avoid any liability under the federal or state antitrust laws, any discussion of competitive business practices and or the amount of fees and or commissions charged or to be charged by real estate brokerage companies to their customers or clients and or compensation and or splits paid or to be paid by brokerage companies to other brokerage companies is strictly prohibited. It is NICAR's policy that it will not entertain any discussion that creates the potential of a violation of federal or state antitrust laws in any meeting, podcast, or conference sanctioned or sponsored by NICAR. Please note that this session is being recorded. To ensure a smooth experience, we kindly ask anyone who is not presenting or part of the panel to mute themselves and turn off their video recording. This is our monthly webinar where we feature a focused topic, followed by a networking haves and needs session. The goal is to give brokers and principals an opportunity to share client needs, whether buying, selling, or leasing, and connect with others in the market. Please drop your name, contact information, and any current needs, listings, or links in the chat. We do save and share the chat afterward for everyone's benefit. My name is Dimitri Lockman, and I'm the current president of NICAR. And today, we're joined by our special guest, Greg Germanos, president of Northwest Insurance Services. He'll be presenting on insurance's do's and don'ts for commercial real estate purchases. Buying commercial real estate goes far beyond negotiating price and closing the deal. Insurance planning, both before and after acquisition, is a critical component that is often overlooked. In today's session, we'll cover key insurance considerations during due diligence, as well as best practices for managing risk after closing, including working with contractors and tenants. While brokers and attorneys play essential roles in transactions, insurance professionals provide a unique perspective on coverage structure, risk exposure, and long-term asset protection. The goal is simple. Better insurance strategy leads to stronger asset performance, fewer surprises, and lower costs over time. With that, I'll turn it over to Greg.
Good morning, everybody. We've had let me back. This is a family shop. One of my brothers and I bought it in 1999 from my dad. I started in the winter 84 to 85 when I was a very young man here, and my brother started a few years later. We have the two longtime employees here. One's inside sales, one's support, and an offsite support person. But so we've seen a number of what we refer to as market cycles in the insurance business. Pricing and underwriting goes from hard, where it's higher price, more restriction, to soft, where it gets easy and less expensive, more competition. But what's occurred since COVID took place, COVID-19, the named virus, practically speaking, 2020 to the present, has been probably the most marked set of circumstances I've seen in my experience here. In brief, we had the virus, we had the supply disruption, which created higher costs for repairs and replacements. Today we're speaking of building. Same thing applied to automobiles as a parallel. The insurance carriers didn't have this factored in to the way their rates were made, so they were behind the times there. So underwriting results, of course, reflected that they're basically losing money. Weather trends, the size and intensity of the storms. I'm speaking of wind, hail. In the Midwest, I'm really speaking of, we get wind here, we get tornadoes, we get microbursts here, which are in essence a much more concentrated, locally identified, basically mini tornado. It's the same effect, basically. The weather trends here are markedly different over the last 5-7 years. Illinois used to be, for years and years, when looking at the country, the 50 states, you grade the states based on wind, hail, the frequency of the storms, the severity, the dollars paid. Illinois was roughly a mid-pack state for years and years. Illinois is now number 3. Texas is number 1, Colorado's number 2, Illinois is number 3. So hail, wind, hail, particularly hail, has become a big focus point for all the insurance companies because it's cost them a lot of money over the last handful of years. I am not here to, ask for handouts for the insurance companies, but everybody has their own opinions, like, mid-road, dislike, but they are necessary. However, actuarial science, actuaries, the insurance companies all either employ them or contract them. Actuarial science is very good at attempting to predict the future based on what's occurred in the past. But when you have these changes in weather, the supply disruption, etc., the insurance companies got behind the ball there. And so you've seen as consumers, whether commercial or you've seen it on your house insurances, or even if you're in a residential association, you've heard the HOA or condo association speak of what's happened with the pricing and the deductibles, retentions, etc., on the building coverage. That's in response. Deanna, I am flowing through the do's and don'ts. I'm on Roman numeral 1 page, first page, item C now, about building maintenance. So basically, newer or updated buildings, they can be older, but they need to be updated, get treated a lot better than buildings who haven't been taken care of so well. It's just that simple. That is probably not, that is not likely to change. Even if the market goes soft a year or two down the line, the insurance people are going to want to treat buildings that are in better shape with better terms than buildings that aren't in such good shape. Just because a building's 80 years old doesn't mean it's a bad building. If it's an 80-year-old building with modernized systems and appropriate upkeep, that building in some respects can be better than a 5-year-old building. So every case is an individual analysis, but there's nothing here stating against an old building. Old buildings can be good, but they have to be set up right. The other item that's really changed the game in this property insurance market, this is item 1D, Deanna, technology, the drone, or the eye in the sky. So every insurance company pretty much worth anything out here in the market is using these type of reports. The report we had is from an outfit called Vexcel, which is a Microsoft company. There's a number of competitors. The insurance companies are using this. I suspect the contractors are using it, the roofers, etc., so forth. The eye in the sky drone, what it gives is giving a pretty good idea what the status is of the roof, the accumulations of Deanna, could you go to the second attachment and we'll show a sample. So wait for a moment, Deanna, I apologize. I put in brown there a sample of the aerial report on the Nikar Nisbar building in Northbrook. I pulled that. So Deanna, if you could put the second attachment up, I'll show you a few pages of what these things look like. Please.
Hold on 1 second. I want to make sure is this the one we're talking about, Greg?
I see the my word, the eye in the sky.
Oh,
it's
okay,
the second one. The aerial report is what I'm looking for.
Okay, one moment.
The front page shows the roof shot of the 450 Skokie Boulevard building.
Here we go.
Yeah, okay, so that literally is your beloved Nikar Nizbar office building. That's the roof. So if we scroll through to this next page, all I want to show on the next page of this report is I highlighted here. So I'm going to scroll up, please, just a little bit. I want to show that spot where I have it highlighted. Okay, image and analysis state, that's a September 15th. So I pulled this report up yesterday. That's 6 months plus. Normally, these things, we see them, some of these are as recent as 3 months that we see. I've seen on some neighborhood strip centers and so forth. So that's these are pretty current photos. I would scroll down 2 more pages, Deanna, please. There. So now, for whatever reason, the blackout, trust me, I didn't redact part of the photo. For whatever reason, this report shows that, but normally you don't have that blackout. But anyway, if you scroll down just a few notches, so that here's the scope of what, like on the roof. They're going to, okay, some of the obvious flat membrane. They're interested in the degree of discoloration, what kind of staining. They're interested in water pooling. Because if there's a lot of water pooling, that means there's potentially a drainage problem. And at some point, the water is going to go somewhere where it's not desired instead of staying on the roof and or going down the drain. So this particular property, the system did not talk about tree proximity. If we scroll down, go down to one more, please. Okay, this one gives you the basic idea. The second image there, scroll down a little bit. Well, you can see there sort of there. So that tree proximity looks close. But the concern on tree proximity is branches with some heft to them that if they come off the tree during a storm, they're going to do damage. If the plant material is small branches, it's not such a concern. And then there's going to be a consideration, well, what sort of deductible is the client taking? The deductible is 5 or 10 grand, and they get a minor damage from a minor tree branch hitting the building. The insurance company is probably not going to be involved in that. That's going to be just a operating expense with the property. So all I wanted to do with this report is to just show the participants, everybody, what these things are, and this is what goes on. Thus far, are there any questions? Evidently not. Okay, Deanna, we can go back to the do's and don'ts, the Word document, the first item, please.
I think I do have a question.
Oh, go ahead.
When you do the aerial photo, is that just like per case, like when you are actually applying for that particular insurance for that particular building, or do you have drones running all over the place gathering data?
No, what this amounts to is the vendor either directly, I suspect the vendor, in this case, is called Vexel. And they're a Microsoft company. They got to have a contract with the drone operators to do updates on buildings in a certain geography. And I would suspect maybe they have some interchange amongst these information vendors. But the bottom line, to answer your question, all I do is I put in my login credentials into the Vexel site, and I type in an address at the upper left-hand corner, and it pulls up most anywhere. I haven't sniffed around Canada or Europe or Australia, but I can tell you anything I've looked for in the United States, it's pretty much come up. So they're not immediately this is a on the fly, a real time lookup. So how their protocol goes for updating images, etc. I can't elaborate, but I can tell you that So what we're given access to, which is comparable to a lot of other people, it's just it's a real time reference guide. It's a subscription service, and one of our main insurance companies has given permission for all of us to use their access point. But so hopefully that answers your question.
Yeah, I was just curious, because
it's
gotten random, on your home. It's like, they're dinging us on a tree too big, So you're like, oh,
and
Big Brother's getting a little big here.
The homes actually, the tree proximity comes up fairly often because the picturesque view of the house with the nice big oak trees surrounding it and the yard, it all looks great on a pretty June, July Sunday afternoon. But when the storm happens, if those kind of limbs get torn off, they go right through the roof. Typically, they're just so big and have so much weight to them, and they damage the property, obviously, but they're actually, frankly, patently dangerous. I mean, somebody inside gets hit by that, they're likely to be killed or permanently injured. It's bad news. So there's a lot of attention to proximity of trees, splitting hairs, how thick of a branch. I don't know, some people will say 3-inch, 4-inch, but really any kind of tree branch with any meaningful weight needs to be moved or removed where there's a reasonable degree of clearance to the structure. This has to be weighed realistically with the property owner's desire to have the tree. I mean, we're not out trying to tell people to chop down the beautiful tree, but there's certain trees that certain property owners that basically by habit they don't it's not high on the list to manage trees, manage tree growth and proximity. So enough on the drone. I just wanted everybody to see what goes on. Deanna, if we scroll down to Roman numeral 2, what to look for and consider in your decision to buy or rent. So the key building systems we're typically interested in are the roof, the electric, the HVAC, and the plumbing, which would be the supply and outlet and waste piping, as well as with certain backflow preventers or sprinklers in certain commercial occupancies. Deanna, if you scroll next page. So the effective age of these systems is a big deal. If you're under 20 years old, effective age, that means either the building's under 20 years old or your 80-year-old building's been gut renovated 8 years ago. Well, that's a good build. That's a good situation too. If it's under 20 years old, that's typically the easiest discussion, the lowest deductibles, the lowest pricing, etc. 21 to 30 years old, it's still generally okay. Depends on the condition of the systems, so forth. Sometimes there's a walkthrough. There's often a walkthrough in general, but depending what it is. 31-plus-year-old systems, or if the system is outside of its expected life, they're not looked at very well. And when the realtor is representing a prospective buyer or a prospective tenant, you need to take into account some of these things, as they are going to influence the insurance terms. There are some specific systems to avoid. In electrical, there's 2 manufacturers that is pretty much no-go zone on property insurance. Federal Pacific Stablock and Zinsco. If you look them up on the internet, you'll see articles. Basically, the Federal Pacific years ago was bankrupted by the litigation related to fires. Zinsco had similar problems. Basically, it's not that every building with that panel is going to have a fire, but their incident rate of overcurrent. The breaker's supposed to shut down at a certain flow. It doesn't shut down. Their incident rate of that is too high. If the current doesn't shut down, there's too much current going through the circuit. It creates heat behind the panel. Heat behind the panel in the wall at some point becomes a fire. So the insurance companies almost, even when we go to surplus line specialty market, none of them want these panels. Here and there, they're out there. Not too much. Plumbing. Older galvanized steel. You know, if it's an older building, you got galvanized steel in there, it may look like a real solid pipe, and it probably is, but it's viewed as something that's not as reliable as newer copper supply and PVC waste piping. Once in a while in an older building, you get one of these trap doors. You pull up the floor access and there's a stairway. Those things are bad liability hazards. Fortunately, there's not a lot of them around here that I've seen, but that comes up. That's no good. That is a complicating matter. Probably still insurable, but the question becomes where and at what terms. Deanna, please scroll down to D. So insurance claim experience. So when the realtor's talking with a client on a couple of buildings, let's say the client's zeroing in from a purchase standpoint, or could be a longer term lease on a meaningful size space, a pertinent question to be asking of the seller or the landlord is, what's the claim experience on this building, particularly on the purchase when you're buying the building outright? What's the claim experience? Tell them you want, part of the due diligence, you want 5 years current loss runs from their insurance people covering the last 5 years of policies. It's a simple report. It says they either had claims or they didn't. If they had claims, they should include a date, a basic description, a dollar amount paid. So sometimes they'll show reserved. Reserved means an estimation of the future potential of the claim. In short, that's something that should be done, particularly on purchases, or if your client is going into a larger lease situation or a lease of an occupancy with an occupancy that's where there's some hazards, some production, some where there's other where there's beyond the most basic store or storefront occupancy. Before you sign the dotted line, Deanna, if you could scroll down a bit. Too often we get presented insurance requirements in a lease or a sales contract or a mortgage that are already committed to. We don't have a chance to coach the client on what requirements are realistic, what portion of them are overkill. We get no chance to push back and help the client tailor the insurance scope and limits of insurance to what's realistic. So, and the attorney does review of contracts. The attorney obviously is in their licensure, they are allowed to advise on insurance. But the problem with the attorney's end is the attorney doesn't deal with the insurance market all day long and underwriters and know what's really going to happen on terms. I have a couple attorneys who call me not to coach them how to write the lease or the sales contract, but here and there they'll call me for my thoughts on insurance matters within these documents. So that's all. On a meaningful transaction, the client shouldn't be signing on before they let the insurance agent sniff this over. So I would go, Deanna, on the next page, please. So with what we'd like to offer the participants and your clients is if you send us in a referral, somebody who's legitimately interested, we can determine that we have we have a market fit for them. We're happy to share this report with your client, with our prospect. There's no qualms with sharing the aerial report on the property in question, and I'm sure they'll find it of interest. There is a third attachment, Deanna, just our real estate capabilities sheet. Actually, Dino, searching property claims, commercial property claims, is there a database for that? I am not aware of one on property, on commercial property yet. There is an equivalent database on personal auto and homeowners that's been in existence for quite a while. It used to be called Clue. It's part of LexisNexis now. I am not aware of that directly on commercial property, but as things evolve, and things are evolving quickly, Dino, with the AI and so forth, that may be changing. And so, and I have, I'll be looking for that, but that's an excellent question. Thank you. Our capabilities is just basically a flyer, what we can do. Pretty much, I would say we're stronger on commercial property than residential. Depends on residential. There's certain companies out there that are very competitive on residential, that in some instances I'll just tell the client to go other places just for terms. But we're quite strong on commercial properties, mixed occupancies. We see a fair number of neighborhood retail properties, strips. We see a number of tenants. We write quite a few restaurants. We okay. Oh, I see. Okay. Somebody just said hi, Antonio. So this, Deanna, if you scroll down, basically on this part, manager and lessor, shopping. Oops, I stay on that number one there. So these are some of the areas we can help. We have a land developer, a general contractor, somebody developing a property. We're very familiar in builder's risk, property coverage, course of construction. Special situations when they come up, Deanna, if you could scroll down a few slots. Oops, just to the lower part of the first page, item 3. Oh, I guess that's only 2. Let me see. Excuse me, that's only 3 lines. These situations, foreclosures, REOs, vacants, we can help in those areas. We prefer to be doing that when we have something else with the client, but we can start out a relationship for one of the NICAR NISBAR members on that basis. Deanna, if you could scroll next page. And so there's just let's scroll down a little more. I would go down our service team. You got me, my brother, Rochelle, Jennifer, our contact info. And that also is at the bottom of Deanna, if you go back to the do's and don'ts sheet, the Word document, the first attachment, excuse me. So that's, I have scroll up just a little bit, please. We were at number right there. We were at number 5. Thank you for allowing me to share some ideas and let you know what we're doing here. The basic principles of what we discussed: property upkeep, updating, etc., applies in parallel to home and residential property, residential rental property policies. That's supposed to say residential rental, 1 to 4 family. So going to market for your client's home insurance, don't go to market general statement with home only. Try to go to market with home in tandem with auto. You'll get a number more, considerably more carriers will consider the account. It's obviously there's a cross credit, but the bigger thing is availability becomes much more. There's much more availability when you market an auto and home account together. So our team writes quite a few accounts of that nature. So I will ask, are there any further questions? If not, I'll turn back to Dimitro and let you and Deanna proceed with the balance of the meeting. And I do appreciate everybody allowing us to share this. And I wish everybody a good afternoon. And judging from outside, stay dry. It looks like it just started raining.
Indeed. Well, I just want to say a quick thank you, Greg, for taking the time to share your expertise with us today. And that was incredibly insightful and a great reminder of how critical insurance planning is throughout the life cycle of a commercial real estate investment. And we truly appreciate you joining us and contributing to the NICAR community. So thank you again for the great presentation.
Thanks.